Giddy up for what's going to be the biggest conspiracy theory market rally we saw in quite a while. Everything in our economy was leading towards super high inflation. And in order to curb inflation, you need to raise interest rates. The problem is, as you raise interest rates, you are putting a lot of pressure on the economy. And because of all of this pressure and a bunch of other factors that I go over in this channel, you start having a collapse of the banking system. The collapse of the banking system is quite simple. You have something called fractional reserve banking, which means a bank only needs to hold a certain percentage of your deposits on hand for withdrawals, and the other amount they can make as investments, various different types of investments. This all started with Silvergate, which was a specific bank for cryptocurrency usage. Silvergate went under. Following Silvergate, you have Silicon Valley Bank. Over $40 billion was withdrawn in a matter of 2 days. Silicon Valley Bank was taken over by the Federal Reserve. And that same Sunday, the weekend of SVB Bank going down, Signature Bank has a run on the bank of $10 billion. We were literally clenching our buttholes to see what's going to happen on Monday. And the Federal Reserve, the FDIC, and the Treasury Department come out with a statement that we will not let depositors fail. So although they did not bail out the bank, they bailed out the depositors. This is huge, huge news. As the week progressed, we have news about Credit Suisse. Credit Suisse is multiple times bigger than SVB Bank. Credit Suisse has a backer, the Saudis. Saudis own like 10% of Credit Suisse. Saudis say we're not going to be putting in any more money into Credit Suisse. This causes a bank run. And Credit Suisse is actually in Europe. It's not being bailed. It cannot be bailed out by the United States. Credit Suisse puts out a statement that says, hey, we don't need a bailout. We're fine. Half a day later, they put out a statement that says somebody is putting a lot of pressure on us, and that somebody is a foreign country. I wonder who it is. And all of a sudden, Credit Suisse is getting a $50 billion bailout from the government. Freaking crazy what's happening, right? Really, really interesting. We then have some news from JP Morgan today that the Federal Reserve has $2 trillion, just about $2 trillion that they can input into the banking system. And that input into the banking system is what? We're literally putting assets, we're literally putting money, we're literally putting funds into the economy. This is a form of, not exactly as the money printer. And all of this vicious cycle is about to start again. Interestingly enough, this should cause a little bit of a run-up. How long? I don't know. Next week, the Federal Open Market Committee is going to meet. In the beginning of this month, we almost certainly thought that it was going to be 50 basis points. At one point, it was nearly 80% chance on CME FedWatch. CME FedWatch is what the market believes is going to happen with the Federal Reserve. It has nothing to do with the actual Federal Reserve, just what the market is betting on. Well, right now, it's an overwhelming number that it's going to be 25 basis points or 0 basis points. At one point, we actually thought that it might be 75 basis points, as the last CPI came in hot and the last PPI came in hot. Well, then we have this week's CPI and this week's PPI. The CPI comes in exactly as expected at 6%. However, the PPI actually comes in at 4.6%, and we were waiting for 5+%. We actually came in cooler, not hotter, than expected. We're expecting a 0.3 increase. We ended up getting a 0.1 decrease. That is massive, massive news because this is setting up for a Cinderella story for the next FOMC meeting. You see, a lot of people, including government officials, are blaming the Federal Reserve for what is happening right now. When you put your money in the bank and they're investing your money, a lot of the times they're investing your money in treasury bonds. When they invest in treasury bonds, they get a certain percentage return. The percentage return back then, 2 years ago, was by far less than it is today. Think about sub 2%, and today you would be getting 4%, 4+%. Because that happens when you have a run on the bank, you have to sell assets in order to honor withdrawals. When you sell assets, those assets are worth pennies on the dollar because nobody wants to get a bond that's giving you a 2% return when they could just buy one in the open market that will get them 4%. It's simple math. Because this is happening, everyone's blaming the Federal Reserve. Also, they're blaming the Federal Reserve because if they're raising interest rates, they're trying to make a recession. They're trying to get people unemployed. They're trying to say, hey, we need to slow down inflation some way, somehow. And the way you do that is to have people spend less money. Well, how do you get people to spend less money? If people are out of work, this is a surefire way to get people to spend less money. And I'm not laughing. I just think the absurdity of what's happening is crazy. Lo and behold, now we're going to have $2 trillion possible. This is as per JP Morgan. That's going to be dumped into our economy. And what is this going to do? This is going to pump up the stock market. Interestingly enough, in 2024, there's going to be something very interesting. There's going to be an election. Nobody wants to go into an election year with a bad stock market because everyone's going to point fingers that you effed up the economy. No matter what, everyone's going to be pointing fingers, right? Republicans, Democrats, everybody. But this seems like a really big coincidence. And it's not, I'm not singling this out. I'm saying it always happens, right? Elections always do this from the beginning of time. That we're going to artificially pump up the economy. Now, things can change tomorrow. It can be completely different. But as of right now, this is what we know for certain. Inflation is still red hot in actuality. On paper, inflation is going down. We're about to dump a shit ton of money in the economy to stimulate banks. Banks cannot secure themselves and they need help from the outside governments. And we're about to have a few meetings that are going to determine how much the rates are going to be. If you wanted to get into stocks during the dips, you had your opportunities. As of what's happening for the last couple of days, I personally would not hold a short position on anything unless we're going to get some type of new information. Because as of right now, it seems like everything should be pumping. I want to talk a little bit about cryptocurrency, and then I'm going to talk a little bit about real estate. When it comes to cryptocurrency, there is absolutely an attack about crypto. Silvergate Bank and Signature Bank were two of the three main banks that supported cryptocurrency withdraws, swaps of any fiat to any cryptocurrency. They are literally the banks that allowed crypto exchanges to be crypto exchanges. Right now, there's a lot of legislation that's coming after cryptocurrency, and actually the Federal Reserve is launching in April FedNow. FedNow is a digital processor for the Federal Reserve, which seems like a precursor to the current pilot programs that are running for CBDCs. Central bank digital currencies is not going away. This is the future, whether you like it or not. And the more that this is the future, the more there is an attack on cryptocurrency. There was a board member called Frank. Frank is one of the people that contributed to the Frank-Dodd Act in 2008 when the financial collapse happened. And he was on the board of Signature Bank. He literally called out the government and said, hey, I believe that this is an attack on cryptocurrency and they're just trying to make an example of us so that other banks don't work with cryptocurrency. This sure seems like this is a coordinated attack on cryptocurrency. I'm not a conspiracy theorist, but you can clearly see what's happening right in front of our eyes. It's definitely rough to be part of cryptocurrency. And then you have Gary Gensler, coincidence, that's going after all cryptocurrencies. And then they're going after the organizations that allow you to bank your crypto, that allow you to interact with your crypto. On the bright side, Fidelity opened up their app quietly a couple of days ago to their customers where they can now buy Bitcoin through the Fidelity app. And this opens up, to tens of millions of Americans, if not hundreds of millions of Americans. Like they bank so many people, Fidelity. It's a really big deal, and it's coasting. The 10-year Treasury yield is down to like 3.6%, and the 2-year is down to 4%. The 2-year literally dropped 60 basis points from like 4.6, 4.7 to right around 4.0, which means that they believe that the Federal Reserve is going to be lowering interest rates or not raising them as much. It also means that in the 10-year, the reason why it's down is because we believe that there's going to be a massive mother of all recessions that can quite possibly now be a great recession, maybe a depression. Who knows what the hell is going to happen? But right now, we should get a run-up in the market. When it comes to real estate is based on the 10-year Treasury yield. Not exactly, but essentially your mortgage rates are based on the 10-year Treasury yield, not directly correlated to the federal funds rate. As the 10-year is going down, expect mortgage rates to go down as well. I think you're about to get a very sweet spot in real estate where mortgage rates are going to become more affordable and house prices are going to become more affordable. And this is going to be a perfect scenario for anybody that actually wanted to get into real estate but did not have the opportunity before. Now, you still need to make a shit ton of money to get real estate, and real estate is as expensive as it's ever been since the beginning of time. Most Americans don't qualify to get a house. So if you have an opportunity to get a home, good for you, and take advantage of it. What's going to happen next is the Federal Open Market Committee, followed by the CPI, the PPIs, and what's happening in the banking sector. You're definitely going to see a lot of these politicians coming out who are going to be waving their hands, so on and so forth, and everyone's going to be pointing fingers at each other. But you bet your bottom dollar, if we do in fact put in $2 trillion of funds to reinforce the banking system, our markets are most certainly going to go up, up, baby. And think about what I just said. Wouldn't it be a coincidence if the stock market is going to go up right until elections? It's going to make the elections look really good. It's going to make Democrats look really good. You can interchange Democrats and Republicans all you want. It just happens that Democrats are in power. And that's why I'm saying this. This is not like an attack on anybody. But yeah, you want the markets to go up. Is this a conspiracy? An attack against cryptocurrency? A boosting of our economy up until the elections, and a boosting of our stock market, which is one of the largest measures that we have for our economy. Every time we talk about Democrats, Republicans point fingers that the stock market is doing as bad as it ever has. So now that's going to be one less set of ammunition that the Republicans can use against Democrats coming into the election. I mean, think about it. It does seem like a perfect storm. At the end of the day, I am welcoming a run-up. Inflation sucks. Luckily, I was buying on the dips. And yeah, if we have a nice run-up for the next few months, I'll be super, super happy. But I'll tell you one thing. At this particular point in time, I will be a little smarter and take my profits if my profits are going to get anywhere near what it was before this entire down market. I got hurt really, really bad because I was not greedy, but I didn't expect the market to do what it did. And I did sell out, but I ended up buying back too early. This time I'm going to be a little smarter because I have more knowledge. I want you guys in the comments down below to let me know what you guys are thinking is happening with the economy right now. And I want you to remember, make sure you keep it clean in between because hygiene is very important. Have a great day.